Have you ever wondered, do I really have enough saved for a house, or am I missing something? If you're buying your first home, it's completely normal to feel a little nervous about questions in general. The biggest problem people make about saving enough money for a house is they only think about one bucket, and that's the down payment. And today I'm going to give you a simple way to estimate how much you'll really need. So let's just make this easy. I like to think of buying as having 3 buckets, and it's important that you know all 3. And so today we'll break that down. Bucket number 1 is the most commonly known one, and that's your down payment. Now, I did an entire video on all the different types of down payments, most typically between 3% down and 20% down. We'll link that video in the comments so that you have easy access to that. But in general, that's the one people think of the most. The most common ones for a first-time buyer might be a VA loan. If you're qualified for that as a veteran, you've earned those benefits, you have your DD-214, you could actually pay 0% down. The Federal Housing Administration, FHA, has a 3.5% down payment. And so that's the one I see most commonly with first-time buyers. But you also have conventional loans that could do 3%, 5%. And at 20%, you actually end up dropping your monthly payment down because you don't have to add on insurance that the lender wants. And so, like I said, there's a whole video on that, and we'll attach it in the comments below. At this point in my life, I'm really focusing on empowering others to discover possibilities. And so my hope for this video is that it answers some questions for you and gives you some clarity to do just that. Bucket number 2 is the one that will typically take first-time buyers by surprise. And that bucket number 2 is upfront cost. So this can change across the country and across different markets that you might find yourself in. But the first cost you might have in a transaction, you found the right home, you're ready to make an offer, you're putting an offer together, and the seller, listing agent, they're going to expect to know that you're really serious about that. The most common way to do that is what we call earnest money. You may also hear this referred to as a good faith deposit. And as soon as you get agreement on a contract, that money's going to be due pretty soon, within 1 to 3 days typically. In Texas, you have 3 days. I encourage my clients to get it in as quick as possible. Traditionally, in my area, that's going to be about 1%. So if you're making an offer and you're offering $300,000, that might be $3,000 up front, and you'll be needing to have those funds available pretty quickly. In Texas, we have something a little bit different. It's called option. You won't see this in every state. Option is a right that you purchase or that you pay for, and that will also be due right up front, typically with the earnest money. In a lot of areas, you're going to have some sort of due diligence period. Sometimes it's worked into the contract, but in Texas, you actually have to pay for the right to have that. Now, the good thing is it's a relatively small amount, and you have an unrestricted right to terminate within the time frame that's established. The most common numbers I see over hundreds of contracts is somewhere between $100, $250, but that could change depending on the market. I've seen it go as high as $500 and thousands of dollars in a really crazy seller's market. But in general, somewhere around 0.1% ought to be pretty close. Another cost that you're going to have that will be expected up front is probably the appraisal. The appraisal for, if you're working with a lender, they're going to appraise the property to make sure that they're making a good investment when they loan you this money. And that appraisal will cost you anywhere between $500 and $900. And so it just depends on the property, depends on the size, but you kind of need to plan for that price range. Another cost that's going to happen pretty quickly is inspections, and this usually will happen even before the appraisal that we mentioned earlier. An inspection in my area is going to run anywhere from $400 up to $900. Another upfront cost you'll have to consider is a survey, and this can run you anywhere from $500 to up to $1,200 for a very basic, typical residential lot, depending on your area. It can get to even more than that, depending on how much acreage you have. If you decided to go and buy a property with a little more acreage, it can really run the cost up, and also the overall topography can impact the amount of your survey. But a typical residential lot, plan on that $400 to $1,200. So in general, you're looking at anywhere from about 1.5 to 2% that you'll need for upfront costs before you close. I'm going to encourage you to stick around to the end of the video. I'm going to be sharing some saving tips. All right, moving on to bucket number 3. Bucket number 3 you'll either hear referred to as settlement cost or closing costs, just depending on who you're talking to or the region of the country that you're living in. There's some major categories within those costs, and this will be money that's all due at the closing table when you go to finalize the purchase of your property. Now, a little bit of a caveat is we talked about those upfront costs. Some of that will actually be able to be applied, assuming that you do everything you say you're going to do in the contract and you close on the property. You can apply some of those upfront costs to your overall settlement closing cost. The first major category is going to be your loan cost. This category can represent several $1,000s and can include things like an origination fee for your loan, a credit report. It will maybe include a flood certification. You'll also have title and escrow fees, just depending on the area of the country you're in. They may call it something a little bit different, but it's the cost of preparing all that paperwork and closing on the service of the loan to make sure that you're getting clear title to your property. Another major category may be how much you're paying the agent who's acting as your fiduciary. A third category within the settlement costs, closing costs, is going to be, we'll just call it other costs. So within the other cost category, what you'll see are things like different taxes that will be applied depending on your jurisdiction. You may also see prepaids. For instance, you're going to need a homeowner's insurance policy, and that is typically expected to be paid up front as part of your closing costs. They'll also do some prepaid. So for instance, if you're getting a loan, they want the extra security, and they'll want a certain amount of months of homeowners insurance. They'll also want a certain amount of months of taxes that will be paid in your area. Now in Texas, we don't have state income tax, but we do have property taxes, and that can be a significant amount. The other cost category can also be several $1,000s, but remember, I told you I was going to give you a simple way to kind of estimate. And so in this category, it'll be somewhere between 2 and 6%, just depending on what all you get negotiated into your contract. And so a quick review, bucket number 1 is the down payment. Could be anywhere from 3% to 20% plus, and special cases you might be able to get a 0%. The bucket number 2, the upfront costs, we're looking at that between 1.5% of the sales price and 2% of the sales price. And so remember, for a $300,000 house, if we're using 2% as our estimate, we'd want to have about $6,000 saved up, ready to pay up front. The third category, the settlement costs or closing costs, anywhere from 2 to 6%, depending on what you're able to negotiate. So before I move on to tips to save, Just let us know in the comments what worries you most about buying your first home. We'd love to kind of address those for you up front before you get into the process. But as promised, we'll move on to our tips to save. The first one I'm going to give you is get your agent to negotiate with the listing broker and or the seller to pay your agent fees. It's very commonly done and is acceptable in a lot of areas, but talk to your agent about that. Another thing you can negotiate, at least in our Texas contracts, and I know in other states where I've been licensed, is who's going to pay for that survey. Remember, survey could be one of those upfront costs, and depending on who pays for that, if you've got the seller, then that's money that you're saving if the seller ends up paying for it. Another thing that can be negotiated in the contract is for the seller to actually pay some of your closing costs or settlement costs. Now, this can be dictated on the type of loan that you do, so the amount that they can actually pay. Your lender or the type of loan might dictate, well, you can only put this percentage, but at least a portion of that might be able to be negotiated with the listing agent for the seller to cover, and that's going to be money that you don't have to bring to the closing table. Another good point of negotiating in the contract is title policy. So in my area, it's traditional for the seller to pay for a title policy, but it's completely negotiable. When we were in a crazy seller's market, I had a lot of buyers that, in order to win the contract, would offer to pay the title policy. Even though it's traditional, it's something you need to be looking for in the contract and ask your agent about if you're not sure where that's at. And that can be, a couple of $1,000s in savings if the seller is the one who's chosen to pay for it. Once you're feeling confident about how much you need to save in order to buy a house, you might be wondering, what are some of the most common mistakes and how do I avoid those? And you'll want to watch this video next, all about that.